Good evening, all. It's Sunday night. Hope you had a great weekend. This is Shea Horowitz, ShogunTrading.com. This is our free weekly newsletter where we review the market action and some free stock picks every once in a while whenever I see them, whenever I see something I really, really like. S&P 500 had an interesting week last week. We penetrated our resistance of 931. This is a daily chart of the S&P 500. And you can see how we penetrated above right here. Broke out of the wedge that we were talking about, came up, and then over here ran out of air right at the 950, came back down, and now we tested it again. Now, the problem is that on Friday we actually closed down. We gapped up with lots of enthusiasm, lots of momentum on Friday, bumped against the 950, actually broke it, went 951, but then we broke back down. That is not a very good sign. In a normal market, I would say that's a problem. But, lately, the market just wants up and the market just wants up. There's no real fighting it. Notice that a lot of people, a lot of our competition, a lot of other experts call this, this is a top, the market is going to dive, the market is going to dive right there. And we refrained from calling shorts. We didn't call any shorts right there because we knew that the market has to break. The market actually has to show signs that short sellers are back before we will call shorts, before the shorts are actually going to work. And that didn't happen. So we went long and we went long with about 13 stocks. Well, we really went long across the board. What we expect now to happen is if we break the 950 with conviction, we'll go to 1,000. I think 1,000 is a next major resistance. And I think 1,000 is a major psychological resistance as well. It's a big whole number. And I think at 1,000 people are going to say, why is the market coming back? Why did the market go from 666 all the way to up to 1,000 in one straight line? What's really going on? What's the fundamental reason for that? And I don't think it exists. Personally, I don't. It doesn't really matter really what I think. It's only what the market thinks. It's only what the market is doing. But I do think at that level, we're going to meet so much resistance that the market may go for a little correction at that point. Now, in order for that to happen, we have to break the 950 and we have to break it convincingly. That means break the 950 and close above it with conviction. At least 5 points above it, at least 955 or so on. I don't really see that happening with the next day or two. Maybe a little bit later, maybe around maybe Tuesday, Wednesday. I think we're gonna rally again. We're gonna come back up again. Our position right now is long, and it's basically across the board. Let me show you some of the positions we have taken. And I'm going to go into 60-minute charts because it's just so much easier to see. And you can see how the market broke out over here. The market broke out over here, came back down, and came back up. It's got to break this in order for us to be happy, in order for us for the long side to work pretty well. We took the oil sector, the USO. It's the United States Oil Fund. We took it at 33.21 and went all the way up to 38. These are just in the last week. We took TDC from 21.56 up to 24. LNC worked okay for us, from 18.47 all the way up to around the 1982 level. So not a whole lot. OSK, Oshkosh, specialty vehicles, 12.15 all the way up to 14.28. That's just 1 week, which is pretty nice. CEDC from 25.66 went all the way up to 31. These are actual calls from last week. The reason why I'm showing you all this is because I want to show you taking advantage of the rally, taking advantage of the market trend and how well it works when you work with the market and not try to guess against it. NSR from the $20 level all the way up to the 21. Not tremendous, but overall the whole position worked out really well. AK Steel. AK Steel is a stock I gave you for free last weekend. We talked about AK Steel. It went from 14.65 all the way up to the 18.27 level. That's almost a 4 point. That's 3.5 point gain on a freebie, which is not too bad at all. There's a reason why you subscribe to this newsletter. WFR didn't work too well for us. We went from 1971 all the way up to 21. Not too bad in just a day, but definitely worked out pretty well. And NTY, that worked out pretty well for us as well. It went from the 26.39 all the way up to the 28.95. How did Potash do? Remember Potash that we gave you 2 weeks ago? 3 weeks ago, absolutely. 97.67 went all the way up to the $120 level, a little bit higher than that. The reason why I'm showing you all this is because you have to pay attention to the S&P 500. S&P 500 is basically the ruling index right now. And whenever the S&P 500 is about to break resistance level, you have to get on the long side. You can't bet against the market. You can't go against the market. And it doesn't really matter what the fundamentals are. It doesn't really matter our national debt, our inflation, the gold, whatever. It doesn't really matter. What matters is catching the market, catching the breakouts, catching the trend. You want to look for periods where you can catch the trend. Right now, we're in another position like that. The S&P 500 is bending against the 950. If we break the 950, this uptrend is going to continue. It's up to you if you want to be in the market and take advantage of this break. If we go up to 1,000, you do not want to be left on the sideline. So that's what I think about this week. If we don't break the 950, we're going to close all of our longs. We're going to say goodbye to the long side, and we're going to look for the next opportunity. But the 950 is definitely extremely interesting. My goal this week is to manage our open positions, our open long positions, and possibly open new ones. Take advantage of the breakout out of the 950. Anyway, keep it short and sweet. Make sure that you pay attention to the S&P 500 resistance levels and so on. Great trading, and I'll talk to you next week. Take care.